bunch of precious metals in a vault. You can borrow against the value of that, which is kind of awesome at a pretty low rate. And so there's different ways to be able to take advantage and have liquidity. But I think paying attention to the Fed and what's happening is really important.
You're listening to Alternative Investor Mastermind, where we do a deep dive on alternative investment opportunities and the lifestyle it can create. Join Jack Krupe as he presents actionable tips and tricks in doing passive real estate away from mainstream strategies. Go beyond the usual fix and flips and try less explored yet rewarding investing ventures. From multifamily properties, mobile homes to cryptocurrencies. Do not miss this opportunity to escape traditional assets and finally create wealth without Wall Street. Now your host, Jack.
Hey everybody, welcome to another episode of the Alternative Investor Mastermind. Excited to have a great guest today, Bronson Hill. I did his podcast a few weeks ago, and now he's coming on ours to drop some knowledge to our audience. So Bronson, thanks for joining us.
Hey Jack, excited to be here, man. Love talking lifestyle, passive investing, growing cash flow, all the stuff. So we have a lot to talk about. I know it's I really enjoyed having you on the show, Mailbox Money Show recently.
Yeah, absolutely. We had a great convo a few weeks ago, and I'm excited for my audience to hear some more from you. So, for those that don't know you, if you don't mind, just kind of go through, just tell us a little bit about your background and how you got into investing.
Yeah, so I was a well-paid medical sales professional. I was making over $200K a year, working with physicians, wearing scrubs, going into the operating room, mostly heart surgical equipment and things like that. And I enjoyed my job. I just didn't have control over my time. A lot of people say they want financial freedom, but really what we want is time freedom. And so I realized, even though I was working 30, 40 hours a week, which was not, a crazy schedule or anything, I just wanted to be able to travel. I wanted to be able to do things that I valued and be able to create. And so I started, looking at different ways to do it, got into single family investing, realized it was going to take me a million years to get to where I wanted to be. So learned about syndication, about raising money. And it's been about 4.5 years. I've raised about $35 million for about 2,000 multifamily units. We have also done ATM machines, car washes, oil and gas, some other VC kind of stuff as well. So, but it's allowed me, I was able to quit my great corporate job about 2 years ago, get out of the golden handcuffs, and I've just been loving life since then.
Yeah, that's a great transition, and it's an amazing amount of action to take over a short period of time. What were the first couple steps there? While you still had your W-2, what was the first deal you did that was aside from the single family, like maybe small stuff? Like what was your first syndication deal?
Yeah, so how it kind of started for me is I had this plan to get 30 houses. I'd been buying houses with a relative in the Cleveland area. We had 4 or 5 houses. And it just really didn't, it was a lot of work, and it just wasn't really, it looked great on paper, but when you actually look at the tenants and how they actually pay and the issues that come up with the property and the repairs, it didn't quite work out the way I was hoping. So I had there's a saying that when the student is ready, the teacher appears, right? So I had this cousin I hadn't seen in years. He's a multifamily guy. I didn't know that, but I said, hey, this is my plan to get 30 houses. He's like, that sounds like a lot of work. Why don't you just do multifamily? And I said, well, I'd love to, but I don't have the money. So he taught me about syndication, said, read this book, go to this conference. I ended up starting a meetup in Southern California, and I'd had a bunch of conversations with friends and family. But I counted, there were 62 conversations with friends and family about investing, and I didn't get any of them to invest. But the guy who first invested with me was a guy who came to this meetup. There were 60 people at the first meetup we did, because we promoted a lot, and he just said, hey, I'd do a deal with you. And so here, I'm not an expert. I don't really know a whole lot about multifamily, but this guy saw me as a leader in that space, right? So I got together with him. I said, here's a sample deal. It wasn't a real deal. It was just a deal like what a deal would look like. And he said, yeah, I'd invest 100K in something like that. So I basically was able to introduce him to another guy who had a deal, who I met at that same meetup, who had 10 years of experience. And so I connected the two of them, and that was my first 100K that I raised. And I think that's the hardest part of this business, is getting from 0 to 1, right? Getting on the GP side, become a general partner where you've actually raised some money. You're actually part of the operations team. Once you get your first deal done, then the industry sees you differently. Your friends and family, you're raising money. That's the hardest part, is getting on the GP side. So that was kind of how I got started.
That's a great story, and it's it really just goes to the power of networking and starting an event as opposed to just showing up at another event. You mentioned the GP side, and for those that don't know, if you're buying a single family house, if you have decent credit, you can just kind of show up and get a mortgage. But can you talk to us some of the high level requirements to get a loan from say a Fannie Mae on a larger multifamily deal?
Yeah. So the interesting thing about all this, I thought when you come from single family or you're doing stuff yourself, We just have this kind of thing that, I've got to kind of do everything, right? I've got to be the money. I've got to be the, finding the deals. I've got to maybe got a broker or a property manager working with, but for the most part, they're coming to you saying, hey, what do we do here? And the amazing thing about large multifamily is you can leverage other people's experience. You can leverage the team. So to me, with that first deal, I didn't have to, my lack of experience managing those assets was not a big deal for this guy because I had a guy who had over 10 years of experience with a proven track record and exits and all this stuff that he had done. So you can see all that, right? So I think that it's not really what one person does. Now, if it's five of my friends and none of us have ever bought a multifamily deal, we're all going after it, whatever. That's not a very strong team, right? But if you have one person that has this experience, typically you need somebody who's high net worth. You mentioned the loan requirements. So typically the requirements are somebody's got to have a net worth, sometimes you got to kind of combine net worth typical of the entire loan size. Sometimes the requirements, and then you also have to have liquidity. So meaning, if the loan is $10 million, you've got to have 10% of that in cash. So you got to show, hey, we've got $1 million among our team in the bank right now. And that's a way that people qualify for these large loans. But the interesting thing is, with single family or small multifamily, it's more about how you are, like how qualified you are as an individual. But as you get to larger multifamily, the lending is typically non-recourse lending, which means they're looking less at your property and your assets, and they are looking at the building or what you're buying as a business, right? So non-recourse just means they can't come after other assets that you have if it doesn't work and take your other assets. Recourse, they can. So if you have a single family house you live in, you don't pay the bill, they can take the house, they can take other things, whatever, to be able to try to get their money back, right? So this is basically kind of how they're structured. But the amazing thing is when you have team members that have different parts and different experience, you come together and create much more value and do a lot more than just one person.
That's really well said. And I've just talked to a lot of people who are sour on partnerships for one reason or another, because it was usually some bad experience, but it was usually something on a smaller scale of, buying like a single family with a brother-in-law, and the roles weren't clearly defined. But these types of deals are at a whole different level when you need to have a multimillionaire with liquidity in the bank equal to 10% of the loan amount, and net worths. You're dealing with a high net worth group of people, and in many cases it borders on private equity fund type of operations with some of the groups that I'm sure both of us have partnered with. So it's really a different level than just getting together with a guy or two to buy a single family house.
Right. And I think that's the mind shift that a lot of people don't realize. Everything, honestly, as an individual, everything feels impossible until you do it. Then it's like, oh, okay, we did this. This is how this works, whatever. So I remember like raising money. If you told me, 4 or 5 years later, I would have raised 35 million. That just sounds crazy. Like, how could anybody ever do that, right? But once you start kind of, putting one foot in front of the other, you realize like, oh, this is doable, and people are doing it. And people that they're not smarter than I am, but they've raised a lot more than me. So how is that possible, right? It's just believing you can do it and learning. And I think it's interesting in the investing space. I've had 1,500 one-on-one phone calls with high net worth investors. And Jack, it's interesting. A lot of people just have this idea that, I should do real estate. And immediately they think, I should buy another house, or I should buy 2 houses, or rent, or I should buy a vacation rental. And it's like, in general, that strategy takes a very long time. It's not passive, and it really doesn't generate much cash flow, or if any cash flow, right? And I always tell people, if you have 1 house or 2 houses or 5 houses, could you 10x your strategy? Could you have 10 times as many, go to 20 houses or 50 houses, and their eyes just about bulge out of their face? But I tell them, like, that's why it's not passive. That's why it's not passive. You have that reaction, right? Versus some of these other deals, if you're passive, you basically vet a deal, you vet a team, and you get into that, and then you're just passive. You get statements and you get direct deposits, and that's really it. You get tax forms. It's much more passive.
Yeah, it's 100% true, and especially for the higher net worth people, the doctors, the high earning W-2s, it's not worth the hourly time that they end up putting in. If they're making hundreds of dollars an hour in their primary profession, they end up just creating themselves a second job.
Right, exactly. And that's what people don't realize is if we undervalue our time. So a lot of times we look and we say, right now, if I were to go buy a single family house where I live in Pasadena, California, rent it out, well, first of all, it's not cash flow positive, meaning the rent wouldn't really cover even what the payment is. There are parts of the country where it does, but then when you calculate in things like insurance and you calculate in property management or maintenance, and then also your time as an individual to manage, even if you're not the property manager, you're still having to get information and feedback. Hey, the toilet happened here. What do we do in this situation? What do you want to? Here's some options. Like you're still involved. So the nice thing about being passive, it's a plus and minus. The plus is that you don't have to be involved. The minus is you lose some control. But in some ways, that's good because you're not the one that has to make all those decisions.
Great. So we've both been in this a long time here, and we caught up a little bit before the call on economics. Let's talk a little bit about how the industry has changed since the first few deals you were doing. I don't know if you remember specifically, but what were cap rates back when you first started doing deals, and what were you expecting? And then obviously we've been through both COVID and then the run up in prices, and now the run up in interest rates. So just talk me through kind of what you've seen over the last bunch of years.
Yeah, so valuations, cap rates were higher. So just meaning and when actually it's nice to buy at a higher cap rate because it means you get more for your money. But when you buy at a higher cap rate and the cap rates go down over time, you get that cap rate compression, increases your value as well after owning. So we've seen that. So anybody who did anything really between 2014 and 2020 did really well because of the cap rate compression. Those cap rates came down. Now we're seeing cap rates are starting to come back up again. They were super low. Certain areas were like a 3 or 4 cap. Some as low as a 2 or 2.5 cap rate, which is you're paying a lot more for what you're getting as far as earnings. And so now that we're seeing cap rates rise again, there are opportunities. I think the big challenge right now is lending is it's very difficult right now in large multifamily. So we actually have shifted a bit to do some of the other alternatives about the last 18 months or so, just because we've seen investor sentiment is interested in cash flow, and a lot of the deals we had that were multifamily were cash flowing. A lot of the expenses and other things have eaten into some of those, the ability to pay distributions and other things like that. And so we ventured out and tried to say, okay, what is the investment and what does it do, for an individual? I have a book coming out called Fire Yourself, which is about replacing your working income with passive income in 3 years or less. And it's just like, no matter what the deal is, how do you vet it in a way where you're vetting the market, the operator, and the deal? And so, it's actually not that much different from doing multifamily or doing large commercial real estate deals to look into some of these alternative things, as long as you understand the market, the operator, and the specific deal.
That's great. Let's dive into that a little bit, because I've also, real estate's certainly the core for me, but I've dabbled in a number of asset classes. I know we both dabbled in a few, including ATM machines. But let's dive into some of the other alternatives outside of multifamily that are interesting and people might want to take a deeper look at.
Yeah, so there's a lot out there. There's a lot of things you can do. Some are higher risk than others. We do have some investments we've done that are like, potential 10 to 100x, type of things. Those might be more in like junior mining companies or VC type of deals, around, it could be VC deals around just different businesses. It could be venture around energy or other things like that. My favorite cash flow investment really has become ATM machines. So a lot of people think, well, do people even use ATM machines anymore? We're all going digital everything, but the number of transactions has actually about doubled in the last 20 years. And the FDIC did a report in 2021 and found that 4.5% of U.S. households, not a single person in the house has a bank account. So you just think about what that means. That means that's 1 out of 25 homes, not a single person there has even a bank account. So that means they're operating in cash equivalents, these kind of things. And another 20% in addition to that, another 20% of Americans are using things like payday loans, title loans. They're using credit card debt, things that are just terrible ways to interact with the financial system. But that's what's happening. So we got about 25% are using a lot of these things, and you think, oh, well, why are they doing it? There's reasons for that. We can get into that. But what I've loved about it is we partner with a very large operator, and they've just been super consistent on cash flow. And obviously these days, if you have cash flow, I think is better, in my opinion, than just having appreciation or having some big return someday, because you actually can live off of it, right? You actually can replace your expenses. You can say, I've got this house payment, I've got this car payment, I want to travel. Having cash flow gives you the ability to have that annuity where you don't have to just wait for, it's coming someday, hopefully, right? It's actually in your account this month. So that's kind of, I have a bias toward cash flow investments, but the ATM one's one I'm pretty excited about.
Great. And then you mentioned energy. Is that oil and gas exploration? Have you dabbled in that?
Yeah. So oil and gas, working interest, things like that. And so we've got some things we've done in that space as well, which has been
fun. I like that space as well. And I stumbled across it because like you, I've got a number of clients that are doctors or high W-2 earners. And real estate, unless you're a real estate professional or your spouse is a real estate professional, and it's really tough if you're just, if you're a single doctor, it's not going to, very unlikely it's going to happen. But, a lot of people just can't get all the way there for real estate professional status. So I stumbled across some oil and gas deals and actually even tested a few out personally as well. And my first deal was about a month before Putin invaded Ukraine, so I did pretty well because oil prices spiked to 100. Sometimes you better be lucky than good. But even with prices coming down to earth, it's still consistently spitting off cash flow monthly as well.
Yeah, absolutely. No, I think the big thing a lot of people are trying to save is really on taxes, right? How do we get out of paying and not, there's a difference between tax. There's tax avoidance, and then there's tax evasion. Tax evasion is illegal. You go to jail for it. There's if celebrities once in a while you say, oh, this person went to jail for not paying taxes, whatever. But tax avoidance is just simply saying, are there ways I can reduce my taxable basis? And well, I'm not a CPA. I don't think you are as well. We're not giving any specific tax advice. There are ways you can reduce your taxable income potentially to zero, even as a high earner. The real estate professional designation for someone or their spouse is a way to do it. Another way is through investing in energy, such as oil and gas. It's typically around 80% of the amount invested can be considered active losses if someone's a general partner in a deal, which is kind of amazing. I mean, you think about it, like, if I make 100K and I invest 100K in one of these type of deals that offers this tax benefit, I can basically reduce my taxable income to like 20K, right? Which is amazing. And then also I get the benefit of whatever the returns are, it's 20% or 30%, whatever those returns are going to be. So it's almost like a bonus that you get, which is pretty wild.
Yeah, it was a pretty, it's a pretty awesome loophole. And I think real estate was like that before 1986. And I think the lobbyists for oil and gas must be more powerful because they've kept kept that option alive for being able to take losses. But it does make sense. I mean, the U.S. is now energy independent. We're a net exporter, and that's actually good for the country and national security and everything else. So I think it's great to incentivize the onshore exploration.
Yeah, it's interesting. I'd love to touch on this too. There's a lot of people that think we should really feel bad for burning fossil fuels, or we should for having oil or gas or other things. But in reality, there's a book that I read that really changed my mind on this. It's called The Moral Case for Fossil Fuels. And it's not a long book, but it's a really well written. This guy, Alex Epstein, wrote it. And it just talks about like how our lives are so much better because of fossil fuel usage. There's almost a link between fossil fuel usage and prosperity. And he gets in all the science behind it. What, a lot of the stuff we believe is just kind of like, it's almost like a cult or something. Like it's in California, for example, they're saying we're not going to have any more gasoline powered cars in 2030 that are being made. But the challenge is like right now in 2023, we're using 50%, like of all the electricity, 50% of that is made by burning fossil fuels such as natural gas or coal. So again, it's like this illusion. We're burning coal to make electricity so we can go green, right? It doesn't make any sense. So at the end of the day, we need more and more energy. Technology will improve to be able to get it, but there's been a huge underinvestment in oil and gas and other technologies like this. So I think it's a great opportunity for private investors because a lot of these bigger companies are just totally out of it, which is really interesting.
Yeah, and you got to love California. I remember when they made that announcement about the all electric. I think 2 days later there was like a brownout and you weren't allowed to charge your car. So it was just crazy timing. To add to the fossil fuel thing and the prevalence of electric cars, there's a shortage of the rare earths needed to actually make the batteries. So I had Lewis O'Connor on a while ago, and he has a company that stores, stores, and you can invest in precious metals. And there's a shortage. There's also, kind of a new Cold War between China and the West on hoarding, certain metals. I think they just banned export of certain ones. So I think it's extremely unlikely that there's enough volume to actually create enough electric cars and batteries. And there's also the environmental toll. If you've seen a lithium mine somewhere, it's not exactly environmentally friendly either. We're just like outsourcing the pain to third world countries.
Yeah, I think that there, it's interesting, the energy topic. I do think there is a lot of opportunity, and sentiment is really changing, especially with the Russia war stuff that is changing toward nuclear. And this, Germany had all these nuclear plants years ago, and then some politician come in and basically shut them all down. And then the politician basically ended up going and like connecting with some big Russian oil company or gas company. So it was like this. It was like there's a lot of corruption around this stuff. But I think that with nuclear energy, and even there's fission and fusion. There's the new one. I can't remember the new one that is coming out that's going to be even better and give me power small things. But I think there are people though that really want to use the green agenda just to get us to not produce anything. And in this book, The Moral Case for Fossil Fuels, he just talks about like we have to put human flourishing at the highest standing. We have to say, well, hey, if people are dying or they're not having enough food or energy or whatever, that's not as important as preserving everything. And he says human flourishing is we should have a beautiful environment as well, right? It's just we have to put human, we don't go destroy everything. We want to have like long-term human flourishing. It's not like one or the other. Either humans like take over everything, like in the movie Avatar, and just like tear everything up and they're evil, or it's that we leave everything preserved. It's kind of like, can we do this in a way that's sustainable?
Yeah, I think you're dead on the nuclear thing. I forget where I heard it, but just for example, an aircraft carrier is usually powered by nuclear, and it's I don't know if it's the size of a broom closet or slightly larger, but it can power one of these ships for 20 years. So the technology's come a long way since the 3 Mile Island or Chernobyl 40 years ago.
Yeah, they've had. I think that's the thing people think of Chernobyl, not my backyard and whatever. But it's they can also go in and where I live, I'm sure where you live as well. It's like they can go a couple hours from any major city and build some big plant there and bring the energy in. It's just actually in California, Newsom also he wanted to shut down all the power plants, but then we started having brownouts. They said, well, let's just hold on this last one for a little bit, so they didn't end up shutting it down. It's in San Luis Obispo, but I just think as we go forward, China, all these countries that are developing are going to need a lot more energy. And I think there's going to be a fight for resources. So I think it's a great opportunity. And I know, like you said, with Lewis O'Connor and some of those metals as well, there's all kinds of opportunities. I know a guy that's doing helium. He's actually doing helium wells or something to try to create or, to go mine helium. And there's need for all this stuff for different reasons, both in energy and in manufacturing.
Yeah, 100%. Kind of dovetails into the economics topic. What's your take on the interest rates and what's happening right now? If you have your crystal ball shined up.
Yeah. Well, how much time do you have? I got a lot of opinions. No, I think right now it's a very interesting time, especially for real estate investors or anybody that relies on interest rates. We've seen one of the sharpest rises in interest rates, going from basically 0% to now over a little over 5 to 5.5% in that range. And that's only been in 18 months. So it's been very fast. There is, a huge amount. I remember how many trillions of dollars of large multifamily or other sorts of commercial real estate debt that needs to be rolled over. And multifamily is actually doing better than some of the other ones. The worst is office space. Where office is a lot of these places are not full. And so there's a lot of power from tenants to be able to renegotiate things. And a lot of this debt is 2-year debt that needs to be rolled over, and it's not going to be able to be rolled over. So the question is, does this stuff go into distress, and do people lose properties, or is it more does the government step in? Something we don't know. I've been of the belief, and I still believe this. I think from when they started raising, that they'll raise for a while, and that at some point there will be a crisis that they'll have to drop rates. There could also be, I think China now has announced they're going to do QE. They're working on QE now to try to print more whatever. And so if that happens, what happens is if they do QE and we're still tightening, our exports get a lot less effective, right? You're going to sell a lot less exports. So we could look at it and say, hey, we're actually going to lower rates as well based on what's happening in other, the international communities doing. So that's also a possibility as well. I think to keep them to go as quickly as they've gone, as high as they've gone, I just think it's caused a lot of real instability within the lending, particularly in multifamily and in other commercial places, commercial space. Because I think that if I'm a lender and I'm getting a rate of 6.5–7% as far as a rate, well, if I were to wait 6 months or 3 months, they've already said they're going to raise the rate 1 or 2 more times. If I do a loan now, I may be losing money versus if I just wait and I hold on. So I think once rates stabilize, or maybe they just come down even very slightly, I think a lot of money that's just sitting on the sidelines will flood into commercial real estate. But it is an interesting thing. We're short somewhere between 3 and 7 million housing units in the U.S., depending on what study you look at. So because of that, you have this demand growing. There's a growing demand of this, but it's difficult to get deals done. Valuations have come down because the cost of money with interest rates is higher. So it's just a very interesting time. I've spoken with our investors on these deals we had that were cash flowing great, have either slowed down on the cash flow or stopped cash flowing altogether due to places like we buy in Florida where insurance costs have gone up 3 to 4 times. We've had costs of labor, costs of materials go up 30 to 50%. And it's hard for sometimes, investors that are not as sophisticated to understand, well, hey, I invest, where's the cash flow? What's going on here, right? And it's like, well, we're doing fine. It's just these external factors that are here. And I think those headwinds will be there until the Fed stabilizes rates or maybe slightly.
Just reminded me of something. So I did Rod Cleef's podcast a few weeks ago. It actually just dropped today. and we got on the topic of rents declining.
Nice.
And I'll have investors send me articles because like something will pop up and it's usually a clickbait article that says rents are declining. But then when I look at my portfolio, especially on the Class B value add type space, those rents are still going up. It's the Class A rents that on the higher end of the market that are dropping. Like what are you seeing across your investments on rents on your investment your properties?
Yeah, so we're mostly in kind of C plus, B minus stuff in Jacksonville, Florida, Atlanta, Georgia. We're seeing rents continue to rise. And part of it, again, people always ask, well, how's the real estate market? I'm like, well, which one are you talking? What area, what asset, what submarket, that kind of thing. So where we're buying, in Jacksonville, Florida, we've got close to 1,500 units. We're still seeing, 10,000 people or more move there every single month. So we're seeing population grow. And in that case, the occupancy is still, the city is still 95% or higher, 97%. It's very, very high. There's nowhere for people to live. So we're seeing rents continue to rise for that reason. They're not rising as quickly as they were. I mean, they were just rising crazy amounts. For a while, it was like rents went from 1,000 to 1,500 over a couple of years, and that was amazing. But we're seeing rents continue to rise, but I think in other markets, especially where population is flat or declining, they may be going down a little bit. But I've heard different things. Ken McElroy recently, who's a friend of mine, he said he did an article or he did a video. I didn't get to watch the full video, but talked about why rents are still going up. Right, that rents are still climbing. So again, but we have over the long term, we've got more demand, especially in specific markets, than we do supply, which is a recipe for them to continue to rise. So I think that buying in the right areas that don't have things like rent control, or maybe they are business friendly, they have other reasons they want the growth, we're going to continue to see growth in those markets. Versus in California, we've seen a net population loss of around 2% over the last 2-3 years. So I think if you're buying where the underlying fundamentals are good, the population, job growth, income growth, those kind of things, they continue to cause upward pressure on rents.
Yeah, that's well said. Well said. I go through phases myself of fear. I want to talk a little bit about the U.S. dollar because that's the main. If I listen to too much Peter Schiff myself, it's like I want to go find a bunker somewhere and buy some gold. Do you spend a lot of time thinking about the deficit and the dollar and how to protect yourself from that?
Yeah, my view on this has changed a little bit. There's a lot of guys like George Gammon, friends of mine, and Mark Moss. All these guys think that we're going to central bank digital currency, the dollar's doomed, everything's happening right away. I think that some of this stuff they asked, I can't remember, it was Ernest Hemingway or something. One of those famous authors went bankrupt, and they said, "How'd you go bankrupt?" And he said, "Well, it was slowly at first, and then very quickly," kind of thing. So it's kind of like we have this slow trickle happening where it's like, yeah, things are changing. Things are costing more. I go to the grocery store instead of, I went the other day. It was $250 for every couple of weeks. $250. That used to be like $150, right? So it's just things are way more expensive. We're all feeling that, but I think that having alternatives to, I don't think it's a good idea to be in currency or be in cash. I think being in things like precious metals, being in things like assets that pay you to hold them, where there's some inflation hedge built into it, is really preferable. But having a little people say, "Oh, having cash is great." I personally still think inflation, even though it's coming down a little bit, is still over 10%, and they say it's 3%. So I think there's a lot of agenda to try to say, "Hey, inflation's lower than it is. People don't panic. No one run to the back." And it's like when you say "don't panic," people actually are believing it, which is surprising to me. But so I think in general, I think it's important to pay attention to all these things that are happening. Because I think if you were only a real estate investor and you weren't paying attention to the macroeconomic environment in 2008, you could have lost your shorts, and a lot of people did. And so there's a lot of things that I think are just really important to pay attention to watch, to say, okay, with what I own, is it safe? What are the risks here? And then I think having things that are outside the financial system, and that's why I like precious metals, because there's no counterparty risk, and you're able to actually have liquidity. If you have a bunch of precious metals in a vault, you can borrow against the value of that, which is kind of awesome at a pretty low rate. And so there's different ways to be able to take advantage and have liquidity. But I think paying attention to the Fed and what's happening is really important.
Yeah, so I was actually in Hong Kong last week, and my economics professor gave a little talk, and he's the one that tends to talk me down from listening to too much Mark Moss or Peter Schiff. And interesting things happened that the U.S.'s essentially main export is its financial system at this point. And historically, the richest countries would put all of their money or a majority of their money into the emerging markets. Now, for the first time, at least in modern history, the money is flowing into the U.S. The oil-rich countries, any wealth that's generally made in the third world, a higher percentage of it is just being basically parked in the U.S. And these higher interest rates are actually a benefit from money inflowing to this country. You mentioned China with QE, and their currency is not even convertible. You can't actively withdraw money at will from it's not a free, really not a free market. So just interesting things happening with the U.S. financial system. It seems like no one really cares. We'll hear about the national debt on cable news, but it's not really a major topic when we're just looking at the global stage right now. It's really there's no other real alternative. The BRICS is nowhere near mature enough. So his take is that there's really nothing to worry about as far as any sort of panic, and that this could go. I mean, it could go another generation.
Yeah. I used to think it was really imminent. All of a sudden, the dollar, we're going to lose our reserve currency status. But Mark Moss actually introduced me this comment called Triffin's Dilemma, which basically means that this guy, it was like in the 60s or something, this guy named Triffin, who was a senator or something, he said that as a reserve currency, there's pluses and minuses for being the reserve currency. The pluses are you get to buy stuff really cheap, everybody uses your currency, you have to run a trade deficits kind of thing to be able to make that happen. But what it does as a negative, it really hollows out the entire manufacturing base. It hollows out a lot of things. You become just a consumer nation. And the challenge is a lot of, like right now, there's no, there's the term called TINA, which is there is no alternative. There's no real good alternative to the dollar. I mean, you could say, okay, maybe the euro, but the euro, I mean, they're having major, there are demographic issues, people getting older. China, people want to, hey, I'm going to sell my dollars and go buy yuan. I think it just feels very, having an authoritative government like that. So there's really no alternative. I don't think China wants it because they want the growth, they want the manufacturing and things. So I think it's going to go on a lot longer than people think. I think we're doing everything we can right now. I mean, from an outside, if you were just an outside observer, it's like, well, what are the ways we can totally mismanage? I mean, there was over 40% increase in the M2 money supply, which is money physically printed or in bank accounts between February 2020 and February 2022, right? So that was a 40.9% increase. So that's why everything's costing more. It's because we've been totally irresponsible. And there's a point where people start to say, if there is another alternative, let's start doing that, right? And so that's what you look at countries now over the last 10 years. You just want to know kind of where we're headed. Look what central banks are doing. Well, they've bought a records amount of gold, physical metals, because that's, again, no counterparty risk. You can trade, you can settle things in other accounts. You don't have to be dependent on the dollar. And then with what we've done with Russia, when the war happened, we basically weaponized the dollar. And so now all these other countries are saying, well, man, if we're on the bad graces of the U.S., we got to find some other alternatives here. So now there's these BRICS nations plus 19 other countries that want to basically start their own type of currency. I'm not saying they will. I'm just saying it's just interesting to watch the way that we're handling this, and we're making it very difficult rather than, hey, we really want to be here to kind of create, be a reserve currency. We're trying to weaponize. So it's just interesting to watch some of the dynamics that are happening right now.
Yeah, speaking of all that, we haven't mentioned crypto yet. What's your take on Bitcoin and the larger kind of crypto/blockchain market?
Yeah, so crypto is interesting. I think there's a lot of cryptos, and what's a good crypto? What's something that there's like Bitcoins, and there's ones that they are just really alternative coins that a lot of them go to zero. I think my friend Mark Moss mentioned this. He kind of got me to believe, okay, in the time when the Canadian trucker incident happened, if you remember that, there were people in Canada that were protesting, as my understanding, legally against, hey, we don't want vaccines or whatever. If I was a law-abiding citizen and I gave money to support a cause I believe in, they were shutting my assets down, which I think is absolutely crazy, right? So who's to say in any, in the U.S. and Canada and any country that you have your money that's in the financial system that you think is your money until you can't access it. And you'll see that in certain cases, but in that particular case, that was the most egregious case I've seen, but it really got me thinking, wow, having more stuff outside the financial system could be really valuable. So the fact you could have something on a cold storage wallet, you could have some money there, some value stored from cryptocurrency. I have a little bit. I'm not a huge fan just because I think it's very speculative. I think there's a lot of people I know that love it and they're really into it. I think that's great. I like real assets that I can hold and touch, and I think eventually, if there is some major panics, people start to run back to physical things such as real estate or metals or other things.
Yeah, and I think that's smart. I have my doomsday hedge, but I started buying in 2019. After the first crash, just being in Puerto Rico, and coincidentally, I guess Mark lived in Puerto Rico for a bit. I didn't know he was here until I guess he moved back.
Yeah, he was in Puerto Rico for tax things, and he figured out how to structure stuff to where he could be in Southern California. So yeah, he's in San Clemente, which I think is about an hour south of LA. So yeah.
But yeah, I have my doomsday hedge. Well, I love that we're dropping a lot of shout outs to other people who are posting content and stuff. So there's a guy named Sean
Right.
King who's down here that's posted this like very well written article about what you mentioned with the benefits and the problems of being the reserve currency, and he thinks strategically for the U.S. government that Bitcoin could be a potential long term alternative where it doesn't go to another country and give that country the extra power to influence, but it goes to this independent vehicle, which in many ways maybe there's still some influence. Wouldn't frankly, if I go conspiracy theory, I think that the CIA co-opted Satoshi Nakamoto and has control of that wallet, and if and when something crazy happens, they may own enough Bitcoin that we can kind of have a soft landing for the U.S. dollar.
Yeah, there's a lot of speculation on that. I've talked to a couple other friends that are really smart, and they're like, yeah, I think maybe the government was a part of that. So there's a lot of stuff. It's hard to prove things, but I mean, the fact that it's so mysterious that who is this Satoshi Nakamoto, nobody knows, and yet all this stuff's kind of been corrected. But it is interesting though too that how the benefits of crypto. Or at least Bitcoin in particular, was that it was anonymous, that it could be transferred internationally. There's a lot of things there. Well, now they've gotten so good at tracking and tracing, they can it's not really very anonymous anymore. Now they have we do ATMs or something called BTMs, which are Bitcoin ATMs, and we don't own any, but there's a group that we know that does it, and they're very high fees, and people go in and they put cash into this machine, and they basically buy a bunch of Bitcoin. And so, but what happens is they take a picture of their face, they scan their ID. And so it's no longer like all of the reasons we were trying to be, I said, this is anonymous, whatever is. And I think central banks don't like the fact that it was anonymous or that it can be anonymous. And there are some illegal things that are done with it, but it might be 1 or 2%. It's not super high like what they're saying. But again, central bankers and a lot of these governments, they want to have more control. They want to have more access to all of this so they can control all the different things. And I think that is a coordinated effort among central bankers to try to get people to be able to control more this Klaus Schwab agenda to own nothing and be happy, and just this bigger role of government, which I think is just a terrible.
Yeah, and I think it's hard for the average American to understand how it can be in other countries that don't have, for all this inflation we're dealing with. Argentina, as an example, has almost 100% inflation. I was there a little over a year ago, and they actually have currency controls, but because of that, there's like a gray market for U.S. dollars. If you exchange your money at the airport or use a credit card, you'll get 250 Argentine peso to a dollar. But if you just bring a crisp $100 bill and you transfer it in a nice neighborhood at a place that's also a Western Union, this is not sketchy. You'll get almost 500 pesos, double, because the Argentinians save in U.S. dollars, and it's hard to get access to them. So they assume if they leave their money in the bank, it's going to be worth half in a year anyway. So they'll just pay the premium for U.S. dollars now. So and there's a lot of countries in the world that are in that spot too. We're really spoiled as one of the the largest and most stable economy in the world.
Yeah, absolutely. It is interesting, and there's all these controls that are trying to happen, and I mean, we were having some inflation, but it is better here in a lot of places, but it's also that I think just we need to have a plan for we've seen a 97% loss in the value of the currency since 1913, the year the Federal Reserve was created, and so we know that's going to continue, and so that's why getting into other assets, and that if you can find a way to use debt. I mean, right now it's a little trickier because debt is higher, but even then, if it's below the actual rate of inflation, it may not be a bad, thing, right? So to be able to borrow and know that your assets will be worth way more in the future, and then, I mean, you talk about trade, what the U.S. is doing. The plan is right now we're going to run a $2 trillion $2 trillion year trade deficit every year for at least the next 10 years. I mean, that's before any other spending bills are added on there. So it's going to be even more than that, and they're finding ways to put things off balance or to classify them differently. But I think that the federal debt is actually, instead of 32 trillion, it's more like probably 120 trillion because of all the off-balance sheet stuff, such as Medicare and Social Security and other things, other obligations that we have. So it's definitely important to pay attention to, and it's definitely important to have a plan. And I think being in real assets, using debt wisely, but buying things that just have intrinsic value is really important.
Yeah, and inflation may end up the lesser of two evils, because that's really when you have that uncontrollable $2 trillion deficit and just a growing deficit as a percentage of GDP, the only, it's either austerity, which will tank the economy, and pretty much whoever's in charge when that happens is probably going to lose the election, or inflation, which is, my thought is, the lesser of two evils. And you're 100% right. That's where real assets come in. That's where smart leverage, especially with fixed rate debt, comes into play. And that's one of the best ways to protect against inflation.
Yeah, absolutely. Yeah, I have an ebook on my website at Bronson Equity. It's called How to Use Inflation to Your Advantage, and it just talks about some of those strategies: real assets, using fixed rate long-term debt, and just finding assets to get into that pay you to hold them. And I think that's really the key. So it sounds like that's what you're all about as well.
Absolutely. So to pivot back into the more traditional, the real estate and the other syndicated assets. So we've had this big run up in rates. Maybe it goes up another quarter point once or twice, but we're likely closer to the peak, or close to the peak here. What's your plan of attack for the rest of this year? As far as what are you seeking out? Where are you putting your own money, and what types of offerings are you expecting to have out to your base of investors?
Yeah, so we've got an oil and gas offering we're working on. We've got another ATM offering. We're looking at there's a kind of a startup in the financial space that I can't really share more about, but we're looking into that. And then just personally, continue to put things in real assets that. I continue to reinvest in these deals that we're doing. So I find, if I put money in, a lot of investors, they like that I'm putting in, this is really what I would be investing in, right, as a passive investor. And so I just put, money into things that we're doing as well. And then we're just continuing to expand our team to be able to increase our reach, with my new book coming out and just more things that we're doing. But I think it is really important to have conversations, like even if things that, you may not talk to somebody who's got a totally different view, and just learn. I think right now there's a lot of polarization where we're not getting the same information. If you're politically right or politically left, you're not getting the same as the other side. So it's important just to kind of keep an open mind and really try to just take it all in and figure, okay, where are we headed? What's happening? What are the trends here? And I think that in 6 to 12 months, we'll be in a different place. I think there could be some big crisis that comes up. There could be some big event that comes up, and all of a sudden, things look very different and much more attractive for things like real estate or other things. I just think, to go as quickly as we've gone with, just the way things have gone, I just don't think it's sustainable.
Yeah. What do they say in politics? Never let a good crisis go to waste.
Yeah, exactly. Yeah, that's it.
So, for someone who's never done an alternative investment, who's just in stocks and bonds and has their, 401k and mutual funds, like what's your advice to somebody who's looking to start expanding into alternatives and diversifying, outside of the kind of traditional financial system?
So I think the biggest thing is to try to learn. I think to go to meetups, go to conferences, obviously listen to great shows like this one, getting on people's deal lists. I know you're doing deals, I'm doing deals, so we have calls, or we'll set up, relationship with individuals. So I tell people, talk to 5 to 10 different groups, get on different lists, try to hear about, 5 or 10 different deals. And then over the next 60 days, make a decision on one, invest in one. And I think a great place to start, some of the real estate deals are a great place to start, or something like, this is a very understandable, like our ATM fund or some other thing like that. And I know you guys have deals as well. And so just finding something that makes sense to you. And when you invest, typically, to me, when I invest in something, it's something I pay attention to, right? If I'm invested, it's not just like, oh, it's paper money. It's like, no, it's paper trading with stocks. It's like, no, it's actually my real money. And so you'll learn a lot, and, things will probably go okay. But it's important to pay attention. And somebody who's got a net worth of 2 to 5 million, 50 or 100K is not the end of the world if something happens, if it doesn't work out perfectly. But the biggest thing is the learning. It's like exercising with a muscle you didn't know you had, right? Once you kind of get used to, like, oh, I didn't even know I had that muscle, right? And, you start to kind of actually work on it. And then what happens is you get this new skill where you're like, oh, I don't just have stocks and I don't just have this. I actually can find something that has better returns and more stability than putting things in these traditional, which I quote unquote traditional, Wall Street assets, which I think are just not good for most people.
Yeah, there's too many people getting paid on Wall Street, and it ends up that investors get subpar returns. And those that are worried about the risk factor, the S&P was down 20-something% last year. Syndication deals, there's no panic selling when you're in a syndication deal for 3 to 5 years. And if they're cash flow positive, you have the time to wait out, any cycle. But too many people panic sell in the stock market. Things drop 5-10%. They panic, they sell, and they miss the miss the upside. So, one of the complaints I've heard on the syndication space is the lack of liquidity. But I think it's important to point out some of the benefits of just sort of making a decision to commit to a business plan and to not really be able to click a button and panic sell.
Mm-hmm. Yeah, absolutely. Absolutely. I think that's very true. I think it's really, temperament is a huge thing. Warren Buffett, was asked what's the most important quality to be a great investor long term, and he said, number one is temperament. You don't lose your crap every time. I'm paraphrasing, but you don't lose your crap every time something goes wrong. Like the ability to sit through ups and downs and kind of watch and also take advantage when things go down. Not to run into the street with the sky is falling. To be able to say, hey, this is something that's actually a time to take advantage of and load the truck up.
Absolutely, that's very well said. Tell us, I know you've got a lot of resources. You've got a book, websites. Give us a rundown of some of the key places to find information that you've got out there.
Yeah, so we're at social media, Bronson Hill. We're on a lot of the social medias, pretty much all of them. If you go to bronsonequity.com, which is our website, we do have that free ebook, how to use inflation to your advantage. Really had a lot of fun writing that. Also, we have our investment club. People can set up a call to hear about our upcoming investments. We've got a number of things in the pipeline now. And then we've got the book, Fire Yourself, how to replace your working income with passive income in 3 years or less, coming out probably in September. So we're just working on that, we've kind of finished it. We just got to get the audiobook and some other things done with that, but really excited to have that going as well.
That's awesome. Well, this was a really fun conversation. I love that we got into a deep dive into economics as well as the kind of traditional stuff. So, thanks again for coming on the episode. Look forward to doing it again sometime.
Awesome, man. My pleasure. Thanks so much, Jack. Really appreciate it. And congrats on your graduation here recently as well. That's really great.
Oh, thanks. I'm still a little jet lagged. It's 24 hours of flying takes its toll, but I love to travel. And that's part of the benefit of this, passive income lifestyle is that I am able to fly around, and I earn a lot of credit card points and miles through expenses too. So we've done episodes on how I fly first class and don't pay for it. So
amazing.
Thanks again. I'm sure we'll see you again at an upcoming event too. I know we cross paths at some conferences.
Awesome. Thanks so much, Jack. Appreciate it. Look forward to seeing you soon.
Great. Thanks. Have a good day.
That's all for this episode of Alternative Investor Mastermind. Now that you know the many alternative opportunities out there all up for the taking, you can finally become ultra connected and ultra wealthy. Get more valuable advice from the experts by subscribing to the show at alternativeinvestormastermind.com. Become a winner in the world of passive investing today in alternative investment strategies. Thank you for joining us. Until next time.